Welcome back to our weekly update. I'm Charlotte McLeod with investingnews.com, and we're going to run through a few of this week's biggest stories in the mining industry. If you enjoy this video, don't forget to hit the like button, subscribe to our channel, and of course, leave us a comment below. Let's get into it.
The gold price was on the decline this week after tensions in the Middle East pushed it past the $34.30 per ounce level toward the end of last week. All eyes were on the U.S. Federal Reserve, which in a widely expected move left interest rates unchanged on June 18th following its two-day meeting. The central bank cut rates in December 2024, but has kept them steady for its last 4 gatherings. U.S. President Donald Trump wasn't pleased, calling Powell too late in a June 19th post on his social media platform Truth Social. Trump's criticism of the Fed chair is nothing new, and while speculation that he will fire Powell has died down, Trump did recently say that he intends to announce his next pick for the Fed leader position very soon. Of course, Fed meetings are never just about rate decisions. Experts often look to Powell's post-meeting commentary to read between the lines of what's said and not said. Tariffs were definitely in focus this time around, with Powell emphasizing that it's still too soon to tell how much of an impact they'll have and how the Fed should react. I spoke to Chris Temple of the National Investor, who offered another perspective on Powell's comments. Chris noted that while Powell didn't say the Fed is going to abandon its 2% inflation target, it may be leaning in that direction. Let's take a look at what Chris said.
The consensus still, although it was extremely close, is barely still for 2 25 basis point rate cuts in the balance of 2025. Whether we get them or not, who knows? That's the current snapshot, which may well change. But that's against a backdrop of admitting for the second, SEP, Summary of Economic Projections, set of numbers in a row, that inflation is going to continue to move back higher, that we've seen the best numbers for inflation. At the same time that GDP slows a bit. So, okay, you just told us that your favorite inflation number, which is a lot of smoke and mirrors to begin with, is going to go back up to north of 3%, which is what they said yesterday. And yet the consensus is you're going to lower interest rates twice in 2025. So he did everything but come right out and admit that the 2% inflation target isn't going to be reached.
We'll be posting the full interview with Chris in the coming days, so stay tuned. Gold has stolen the precious metal spotlight in 2025, but this month silver has had a chance to shine. The white metal has been on the rise since the beginning of June, and this week it broke $37 per ounce for the first time in 13 years. While silver is known to lag behind gold before playing catch-up, it's also known for its volatility, both to the upside and downside. Its recent move has created excitement, but market participants are also wary that the price could correct. I asked Peter Kraut of Silver Stock Investor what factors are driving silver, and he said he sees a perfect storm emerging. Here's how he explained it.
You've got sort of the macroeconomic picture that is, I think, certainly bullish for silver like it is for gold and so a lot of the other commodities. But I think at the same time, you've got the market kind of coming to terms with the fact that silver is in a deficit. It's unlikely to be able to rectify that deficit for several years. In fact, the Silver Institute thinks we're going to see record deficits at some point over the next 5 years. And silver supply is unable to grow. We saw a peak 10 years ago in mined silver, and the overall silver supply is essentially flat. So flat supply, growing demand that's nearly 20% above supply. And our ability to meet those deficits is shrinking because we're tapping into these above ground stockpiles that have shrunk by about 800 million ounces in the last 4 years, which is the equivalent of an entire year's mine supply. So it's the perfect storm, Charlotte. It's really all coming together, and I think that the market's realizing that.
But does that necessarily mean silver is ready for a big breakout? Peter has a target of $40 by the end of 2025, but said silver could potentially go 10% above that. Jeffrey Christian of CPM Group attributed the boost in silver to increased demand from investors, especially when it comes to ETFs and wholesale products. He's projecting a bumpier path forward for the metal. This is what he said.
You also have the last time I looked, it was 490 million ounces of open interest in the July COMEX futures contract. And that's 2 weeks from first delivery. So most of the people have those shorts. Those are hedges of their physical inventories. They keep those hedges in place, but they roll them forward. So they'll be buying back their Julys and selling September futures to keep that hedge in place with the next active futures contract. That buying back of the Julys could push silver prices higher. So, if you really want to talk granular prices, we wouldn't be surprised to see the price of silver fall to $33, $34 an ounce and go up to $40 an ounce and then back to $33 an ounce over the next 4 weeks.
I definitely recommend checking out both of those interviews. You can find the links in the video description. And if you'd like to share your thoughts on the outlook for silver, please leave a comment below. Uranium was also getting attention this week, with the spot price making moves after the Sprott Physical Uranium Trust announced a $100 million bought deal financing on June 16th. It was bumped up to $200 million the same day due to strong demand. While most uranium is traded via long-term contracts, the spot price is more easily available and is often used to gauge the market. Spot uranium has entered a consolidation phase since hitting triple-digit levels in early 2024, creating frustration among those who are waiting for the industry's strong long-term fundamentals to be better expressed. I'll be speaking with Sprott's John Champalia next week about the financing and the uranium sector overall, so drop your questions below if you have them.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.